Elon Musk is getting much closer to his objective of owning a quarter of Tesla by boosting his holding to slightly over 20%, up from his last announced 13.3% share in May. Musk is receiving backing from Cathie Wood, the CEO of ARK Invest, despite criticism that he wants more authority. She informed us the following last week. Elon Musk is our Renaissance guy and the greatest inventor of our time. As a result, I'm always shocked by the resistance he encounters, and I do believe that the 25% is asking for vote interest rather than additional economic interest. Additionally, we support super voting rights for many of our companies because we know that visionary leaders go through times of volatility and that they simply need to be able to carry out their vision without being distracted by boards of directors that are influenced by and listening to short-term oriented shareholders. Investors are left wondering about the ramifications of Musk's audacious action while Tesla's future remains uncertain. Come analyze the most recent events, consider Tesla's future, and learn what this implies for investors like you. In addition, we'll examine some fascinating projections for Tesla's stock price that will provide insight into the company's future. If you haven't already, please like this video and subscribe to our channel before we begin. Let's get this video started. Welcome to Tesla Stock News. Elon Musk's shareholding of Tesla has increased recently, and he currently owns slightly over 20% of the business, a substantial rise from his 13.3% interest in May. He is getting closer to his goal of owning a quarter of the business with this action. Musk is criticized for wanting more authority, but ARK Invest CEO Cathie Wood supports him. Wood, who expressed amazement at the opposition he faces, hailed Musk last week as the innovator of our time and a man of the Renaissance. In contrast to economic stakes, Wood highlighted Musk's proposal for greater voting interest, underscoring the necessity for visionary leaders to manage volatility free from interference by stakeholders with short-term interests. Steve Wesley, the founder and managing partner of the Wesley Group and a former Tesla board member and California state controller, joins the conversation. In light of Wood's comments, Wesley recognizes Musk's revolutionary influence, especially in light of Tesla's stellar 2023 performance, which saw the company generate $97 billion in revenue and dominate the U.S. electric vehicle industry. Wesley does, however, stress how crucial it is to uphold sound board governance in the face of Tesla's remarkable expansion. He emphasizes that Tesla must concentrate on maintaining growth, particularly in light of the upcoming release of the $25,000 vehicle, which he believes will be Musk's next big obstacle. While acknowledging Musk's propensity to balance multiple obligations across his businesses, Wesley cautions against distractions, such as the ongoing campaign for expanded voting rights. He highlights how vital it is that Tesla focus only on expanding, offering opportunities like self-driving technology, the energy division, and the global charging network. Wesley emphasizes that assessments and remuneration ought to be determined by performance. Turning his focus to competition and speed to market, Wesley declines to comment on Musk's plans to relocate SpaceX and Tesla. Wesley acknowledges that he no longer owns Tesla stock, despite his excitement about the company's long-term prospects. He emphasizes how crucial it is that Tesla pick up speed on its growth curve, since this affects the company's valuation and the mood of the market. Musk only made a passing reference to the prospect of Tesla producing an astounding 20 million cars a year in the future, amidst the rapidly changing electric vehicle market. This information was made shortly after a report that showed Musk owned a substantial 20.5% of Tesla, making him by far the company's largest shareholder. It is obvious that a significant event is imminent given the skyrocketing price of Tesla's stock. However, how does Musk's significant ownership interest affect the situation, and what does this signify for investors? Tesla is not exempt from the difficulties that conventional manufacturers face, even though the EV industry is expected to grow in the near future. A few of the challenges Tesla confronts as it negotiates this shifting environment are pressure on margins and the requirement for product updates. Nonetheless, there is cause for hope given the robust demand and Tesla's competitive advantage. From an investment perspective, astute investors may find that Tesla's recent stock price decline offers a fantastic opportunity. Although determining Tesla's worth may be difficult for some, the company stands out due to its dual roles as an automaker and a tech pioneer. Musk's substantial ownership interest supports his ambitious plan for the company and further demonstrates his dedication to its long-term success. Recent SEC filings indicate that Musk owns a 20.5% stake in Tesla, valued at more than $120 billion. With Musk's strategic vision and this significant ownership, Tesla is well positioned for expansion and innovation in the cutthroat EV industry. For the past 6 months, Tesla has lagged behind the Magnificent Seven, its leading rivals. This is partly due to a bold approach that puts increasing market share ahead of increasing profitability. A number of price reductions in important US, European, and Chinese markets have been implemented as part of this plan. With a market valuation of almost $621 billion, Tesla is still the 11th most valuable corporation in the world despite these difficulties. Given the significant growth potential in the EV sector, investors are left wondering about Tesla's long-term performance. Although Tesla seems to be in a good position to benefit from this expansion, questions are raised about the company's leadership. Although Elon Musk has long served as Tesla's spokesperson, will he have the ability to properly steer the company's direction if he gains more controlling authority? And might this improve the performance of Tesla's stock? Musk has a sizable ownership share in Tesla, 20.5%, which demonstrates his sustained dedication to the business's growth. Recent actions indicate Musk has been actively purchasing Tesla shares, even though he previously sold them in 2022 to finance his Twitter business. The reason for this uptick in optimism about Tesla is because Musk is getting closer to acquiring his targeted 25% ownership in order to have more control over the company's course. Many people see this as evidence of Musk's unshakable faith in Tesla's future, regardless of his power play. Legacy automakers are engaged in a tough competition to draw in customers and boost sales in the face of the electric vehicle revolution. These automakers are using aggressive pricing methods to persuade consumers to convert from conventional internal combustion engine vehicles to electric alternatives in response to the growing demand for EVs. With EV prices dropping by more than 10% in the past month alone, the intensity of this pricing battle has escalated to unprecedented levels. Automakers are fighting for market share in the quickly growing EV sector, which is reflected in the steep price decline. Customers are therefore given previously unheard of chances to buy EVs at lower cost points than in the past. Hyundai has introduced an alluring offer on its Ioniq 5 model, making it one such alluring offer. The Ioniq 5 is positioned as a flexible crossover or hatchback option, and its elegant look and array of cutting-edge technologies make it a popular choice for discriminating consumers. Hyundai's generous cashback incentives and alluring financing choices make the Ioniq 5 an even more alluring choice for buyers looking for an EV that is both affordable and of high quality. With alluring offers on its Model Y, Tesla, a leader in the EV sector, has also entered the race. EV aficionados all over the world have taken notice of the Model Y because of its performance, range, and innovative technology. By offering competitive pricing and alluring value propositions, Tesla hopes to further establish itself as a market leader in the electric vehicle market. What is the ideal price point to encourage the widespread use of electric vehicles, however, in the midst of all the sales and promotions? Prices around $30,000, according to industry analysts, are the key to opening up a larger market sector and quickening the shift to electric vehicles. At this price point, EVs become more affordable for a larger group of buyers, lowering entry barriers and encouraging adoption among a variety of demographics. The Kia EV9 Stan,